Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, joined today with a brand new guest. We're going to be discussing oil and the economics behind that. We've seen the oil price move up quite a bit as of lately, especially off of its bottom a couple years ago. We're going to be speaking today with Ellen Wald, PhD, president of Transversal Consulting. She's an expert in guiding businesses through the confluence of energy markets and geopolitics. She's the author of the book Saudi Inc. Ellen, thanks for coming on Crush the Street with me today.
Thanks for having me.
Ellen, oil is a key driver for the economy. The U.S. dollar, of course, derives much of what we have come to know as the petrodollar, much from oil. Oil has moved up quite dramatically, and of course, since it completely bottomed a couple of years ago. And in the last couple of months especially, we've seen some significant moves. So just as a starting point to get to know you, what are your thoughts on oil and what is going on at the moment?
What we're seeing right now really has a lot to do with the fact that supply and demand for oil are coming a lot more into close connection. So a couple years earlier, when we had just this incredible, immense oil glut, we saw that prices weren't really being affected by geopolitical issues. So there was just such a glut of oil out there that it didn't matter whether tensions were rising in the Middle East because there was just so much oil out there. Now that this oil glut is resolving, and it's not all gone, there's still a glut of oil, but now that it's much less, we're now seeing these geopolitical issues, these political issues play out much more strongly in oil prices. So, just yesterday, for example, when Israeli Prime Minister Benjamin Netanyahu gave this speech explaining this evidence that the Israelis had about, this secret Iranian nuclear program that they had going on, oil just spiked immediately. And that's really an example of how far we've come really in the past couple of years.
Right. So let's talk about the dynamic of what takes oil higher, what takes oil lower, and specifically the dynamic of OPEC trying to control the output of oil, cutting it or, overproducing. Do you feel like there is a reason or a significant benefit for having this centralized power that, kind of moves the needle on what is happening in oil, or should it just trade and should countries just produce what they need to produce and let the market settle the way it would?
Well, I'm a free market person, so I don't think that any centralized power pulling the strings on the market is a particularly good idea. But it's interesting because we have a perception in our minds that OPEC has this ability. And the truth is that OPEC only sometimes, occasionally, has that ability. And we have this perception largely because of the 1973 oil shocks, when OPEC, a confluence of things kind of all came together at a particular moment in time that enabled OPEC to have such incredible control over the market that they could just cause oil prices to spike so much. And that kind of group of conditions hasn't necessarily ever really been replicated again. So there are times where we think that OPEC has a certain control and OPEC really doesn't. And it's just kind of in our minds that it's this super successful cartel that, can cause oil to, go up so much money and can cause this economic harm to certain countries that it wants to. That's not, in fact, that's rarely true. Only sometimes is that true. And we've seen at different times, if there's very tight supply and certain OPEC countries have spare capacity, and if they're the only ones with spare capacity, then they can produce more to cause oil prices to stabilize, or they can shutter production and cause oil prices to rise more, but only in those certain kinds of situations. So right now, we're seeing these headlines that say like OPEC, is causing prices to rise. Well, OPEC's not really causing oil prices to rise, because if you look at the total amount of oil that their production cut deal is supposed to take off the market, it's only 1.8 million barrels per day, and that's including all the non-OPEC countries that came to participate in this deal. Plus, they're not even really all adhering to this. What's really happened is that Venezuela is completely dropped off the map when it comes to oil production, and one or two other countries have really cut down. And this is largely due to the fact that Venezuela just can't produce any more oil. It's just disintegrated to the point where it can't, and that is, I think, the hidden kind of issue that's affecting oil prices today.
So, Trump put out a tweet, said, OPEC is at it again, and you're saying it's not really OPEC that's over pulling the strings, because we know a couple of years ago, when oil went really low, the thought was that there was this attempt to really crush fracking here in the U.S. So, just maybe if you can expand on that and just some of your thoughts on this.
That's a very big misnomer. And what OPEC did, and really it wasn't OPEC so much as it was OPEC's biggest player, which was Saudi Arabia. And at the time, in the end of 2014, what we were seeing was a market where other sources of oil, non-OPEC producers, were becoming much bigger players. So one of those is the United States, but other markets as well, Canada as well. And so oil prices were beginning to drop because there was much more oil on the market. And Saudi Arabia was under a great amount of pressure to cut oil production. And so Saudi Arabia, which at that time was led by Oil Minister Ali Al-Naimi, and Ali Al-Naimi went to other, OPEC countries and said, okay, so you want to cut? Well, then we all have to cut. Venezuela, are you going to cut? Are you going to cut? And they're all like, no, we can't afford to cut. And they wanted Saudi Arabia to cut. And so Ali Al-Naimi said, look, OPEC can't do this itself. So he went to non-OPEC producers. He went to Mexico. He went to Russia. He went to all the other big ones, not the United States. The United States can't participate in a cartel. And he said, we can all cut together. And Mexico was like, no, we can't cut. Russia was like, we're not going to cut. And basically Ali Al-Naimi was like, well, everyone wants Saudi Arabia to cut. They don't want to cut themselves. And Ali Al-Naimi had been the CEO of Aramco, which is the Saudi oil company, during the 1980s. And at this time, basically the oil minister at that time had decided that Saudi Arabia was going to be the one to cut production and kind of play this swing producer. They would cut production if someone needed, and and that would keep oil prices stable. It didn't work. And oil prices kept getting lower, and Saudi Arabia's oil production dropped to like 2 million barrels a day. And Aramco as a company suffered. They had to close down facilities because they didn't know what to do. They just had to shut down oil producing facilities, and that's not good for the infrastructure. It wasn't good for the company. And Naimi said, look, I'm not going to be the only one to cut now. If you want OPEC to cut, you're all going to have to cut together. And no one would do it. So he said, fine. He said, let's open the taps. And he knew that Saudi Arabia is the lowest cost producer. So everyone was going to hurt because of it, but Saudi Arabia would hurt the least. And in the end, it worked out well. He didn't kill shale. He was never trying to eliminate shale. But what did need to be eliminated was the extremely high cost production. Turned out that the highest cost production wasn't in the United States. It was actually in Venezuela. And so he basically killed the Venezuelan oil industry. Now, the shale industry underwent a lot of consolidation, which was good for it. And they cut, excess waste. They kind of stopped producing in certain areas for a while that weren't all that, productive, like in the Dakotas. But the industry survived and is much stronger today.
Interesting. Yeah, no, that's a really interesting dynamic then. So do you see the possibility then of oil significantly spiking in the near future here? Or is the competition of electric vehicles and solar and other sort of things that are perpetuating the use of batteries keep going to keep oil prices in check going forward, maybe something that people weren't anticipating 10 or 20, 30 years ago?
I think that there's a significant opportunity for oil prices to rise in the future. And a lot of that has to do with the fact that there's a lack of investment going into big, large-scale projects especially. And this is something that certain people in the oil industry have been calling attention to, that the very first thing to go during this downturn was big, large cap expenditures. So basically companies were cutting these like major projects that would be years in the pipeline. They're just cutting that expense. And that makes a lot of sense. But the fact is that that kind of investment hasn't come back yet. And we haven't seen it coming back, even though oil prices are higher now. And if it doesn't, then we could very well possibly see oil prices getting much higher in the next couple of years. What about electric vehicles and batteries and things like that? So electric vehicles right now are not really at the point where we can expect to see mass adoption on the scale that would really impact oil prices. I mean, you can get maybe a 300-mile range in an electric vehicle. That's just not enough for most families in the United States to buy an electric vehicle. It doesn't work for people who don't live in big cities, who drive more than 30 miles a day, for example. And it doesn't work in places like India, where you're not going to be near an electric charging station if you're driving your truck out to the mountains. So it's gasoline-powered cars are still going to be around for a very long time, and they're still going to be the primary driver of oil demand until we see better technology. Now, that doesn't mean that that better technology isn't coming. In fact, I very much believe that we will achieve that technological breakthrough, but it's not here yet.
Sure. Yeah, certainly 300 miles and then a 45-minute charge is pretty inconvenient still for electric vehicles. And, not every car is even doing 300 miles. I mean, those are some of the Teslas. Okay, Ellen, so let's talk about who benefits from higher oil prices. It's usually the companies that export oil largely, but is higher oil prices good for the U.S.? It was certainly good for fracking in the U.S., which was a lot of where the jobs were created over the last few years, the good jobs at least. But is it good for the economy as a whole to deal with higher oil prices?
It's a bit of a Goldilocks situation here, where you don't want it too high or too low. You want it just right, because higher oil prices are an indication of a thriving economy, first of all. So that's a good sign. And the fact that oil prices are rising now, and the fact that gasoline prices are going up now, we keep seeing these headlines, gasoline prices highest they've been in, 2 years, 3 years. Well, they're still relatively low. So, these are very much kind of scare headlines. And that's definitely, I see that's where the Trump tweet on oil came from that we saw a couple weeks ago. He knew that the gasoline prices are going up, and he wanted to deflect the blame for that onto OPEC. When OPEC, everybody loves to hate OPEC. I think they're the third favorite villain, basically. If you can blame OPEC for something, then, do it. And it was a very astute move by Trump, because now when people see higher gasoline prices, they're going to blame OPEC, not the United States. When in effect, U.S. oil producers are maybe just as much to blame as OPEC, but they're not going to get the blame now. So oil prices are going up. We are going to see higher gasoline prices this summer. It's not necessarily a bad thing, because we're still in a place where we can tolerate these oil prices, and we can probably tolerate oil prices going up a bit more as well. And, the whole thing is also very cyclical. Prices will get higher. Companies will produce more oil. Prices always get higher in the summer months anyway. We'll probably see them falling by the time we get to the autumn anyway.
Okay. So what what are your thoughts then on commodities as a whole? Because it seems like oil drives commodities very much. It's the major input, the major cost when you want to produce and mine. In your experience, what are your thoughts then in regards to commodities, and with what we might see with oil going forward?
Oil is a very volatile commodity, and it's not like some of the other commodities that we see that are much more dependent on agricultural cycles, or if kind of what the weather patterns are, you can kind of predict. So like, what's the soybean harvest going to look like, or what's the wheat harvest going to look like. Oil isn't like that, but it's very volatile and it's very prone, and we're entering into a period where it's even more prone to like these sudden spikes, like the one that I talked about happened yesterday. And so when we're looking at oil, we need to kind of anticipate what the major geopolitical issues are going to be, so you can tell, when it might spike, when it might go down. So, for example, on May 12th, which happens to be a Saturday, so markets aren't going to be open. But the president is supposed to make his decision about this Iran deal. And if sanctions are reimposed on Iran, that could eliminate up to maybe 1 million barrels a day from the market. But it's not just about that. It's also about, will increasing tensions in the Middle East also affect the oil market? And so we can definitely expect the oil market and the commodities markets to react to that. So we could expect to see either a drop or a spike, depending on what the decision is. And we need to kind of anticipate those things going in.
Yeah, that's interesting. All right, so Ellen, what are you working on nowadays? You got your book out. Tell us a little bit about what you're doing.
Gosh, well, I am doing a lot of promotional activities about the book, talking about the book. I'm going to be speaking actually at the 92nd Street Y in Manhattan on May 11th about the book, about some of the issues that the book raises in terms of how Saudi Arabia looks at its oil company. I'm doing a lot about Aramco. There's a lot of talk about this Aramco IPO. People want to know about this company. Aramco, as the Saudi national oil company, really hasn't been on the radar of most Wall Street kind of analysts and most of Wall Street for a long time, because it was a private company. It was owned by the Saudis, and they weren't really following it. But now that the Saudis are talking about making Aramco public, about selling shares of Aramco on stock markets, it's suddenly like become this big thing to know about. What is this company? Where did it come from? And where is it going? And just how much is the company tied to the Saudi state? What role do the Saudi royal family play in this oil company? I mean, these are all really good questions.
Yeah. No, that's really so. And in terms of, what else are you working on with this? Like, how did you get the idea to like write this, and where did your passion stem from?
So my passion is history. I'm actually a historian by training. So my PhD is in history. And I wrote my dissertation about American and British oil companies in the Middle East in the 1940s and 50s. And that's really how I got started looking at this oil market and these oil companies and what they were doing out there in the Middle East. And what really kind of galvanized me to write this book was in 2014, when Ali al-Naimi at Opec made this decision to basically like open the taps and not enforce quotas anymore. And everyone was like up in arms. So many people had not anticipated this decision, and they kept saying, when is Saudi Arabia going to realize that this was a horrible mistake and change its mind? And I was like, Saudi Arabia is not going to realize this is a horrible mistake. This was not a bad mistake. This is what they want to do. This is their strategy. It's their long-term strategy. And once I realized that, I had a story to tell about why they have this view and where their view comes from and where it's going. And so that's how I basically decided to write this book that explains, here's where these people came from, and here's the mindset and the motivations that go into their decision making. And I don't like to predict the future. I hate, people ask me like, well, what's the price of oil going to be? And I don't make predictions. I think you'll be wrong no matter what you do. But if you understand where people come from and you understand their motivations, you have a much better chance of understanding what they are going to do in the future and the decisions that they are going to make.
Yeah, no, that's really cool. So where will you be speaking next? And, how can people find out more about what you do?
So as I said, I'm going to be speaking at the 92nd Street Y in Manhattan, and you can go ahead and register for that event. It's a lunchtime event, and I'll be speaking about the book, and I'll definitely have some fun, I think we call it swag, bookmarks to give out to attendees. And if people want to find me, they can definitely find me on Twitter. I'm super active on Twitter. My handle is Energized Economy. That's ENERGZD Economy. And I tweet about all sorts of things, about OPEC, about what's going on in Iran. I also teach Middle East history at a local university. And I'm teaching a class right now, well, it's almost over, about Iran. And so a lot of times when certain political things are going on in Iran, I will talk about that, about what kind of motivates the Iranian political system, because that's another interest as well of mine.
Awesome. Ellen, thank you so much for coming on crushthestreet.com. I really appreciate your time. And we will have the links to all of your social medias, your websites in the description area. Again, thanks for coming on Crush.
Thanks for having me.